Mr. Chairman, I have a couple questions about the interest the Fed pays on excess reserves. And you mentioned, of course, that the IOER was raised by the committee 20 basis points. And that's a result, as you said, of the upward drift of the effective Fed funds rate in that target range. Do you think that that's going to resolve that issue, or might there be further action required by the committee in the future to continue lowering IOER relative to the midpoint of the range? And further, was there discussion among the committee today about what's causing that? Is it purely technical, perhaps related to bill issuance, or is it telling you something about the level of scarcity and truly excess bank reserves? Thank you.
Thanks. So I would say that, remember, the important thing is that we want the federal funds rate to trade in the target range. That's the whole idea. IOER is the principal tool by which we assure that that will happen. And we've said in our basic documents that we will adjust the use of our tools as appropriate. We don't expect to have to do this often or again, but we're not sure about that. If we have to do it again, we'll do it again. Again, don't expect it to happen. You ask why, and yes, we of course we're looking carefully at that, and the truth is we don't know with any precision. Really, no one does. You can't run experiments with one effect and not the other. I think there's a lot of probability on the idea of just high bill supply leads to higher repo costs, higher money market rates generally, and the arbitrage pulls up federal funds rate towards IOER. We don't know that that's the only effect, and we're just going to have to be watching and learning. And frankly, we don't have to know today. What we really need is to have the federal funds rate trade in the range, and that's what this minor technical adjustment accomplishes.
Edward Lawrence from Fox Business. So with the numbers that we're looking at, you talked about more people getting jobs, the wages are increasing. Are we seeing with the fiscal policy, a fundamental shift in the economy where we have lower natural unemployment, also possibly a lower rate of natural unemployment and lower inflation?
Your first question really is, do we think the natural rate of unemployment is lower? So I think we do believe it has moved down significantly over a long period of time. We don't think that the natural rate of unemployment, it's not one of those variables that moves around a lot. It tends to be driven by slow-moving variables like the education level of the population, like the functioning of the labor market and things like that. So, it may have moved down too, on a cyclical basis, lower as the economy gets hotter and hotter. There's some possibility of that. But, the thing is, if you look back, there have been a lot of studies done, and, real-time estimates of the natural rate of unemployment have uncertainty bands, which are quite wide. So we have to remember that and very much be guided by the incoming data. You ask about inflation. Inflation, we look at the 2% inflation objective as something that central banks, the Fed, really control, and we have to be strongly committed to achieving that, using our tools to do that. I think in recent years, the dominant force has been, disinflationary, has been pushing down on inflation, and so we've been pushing back up. Of course, all those years when we were growing up, it was the opposite. Inflation was too high, and central banks were constantly pushing down. It's really important that inflation not fall below 2%, that inflation expectations remain well anchored at 2%. Very important, because the implications of inflation below 2% are that you're closer to the zero lower bound, meaning the Fed has less room to cut, meaning that we'll spend more time there and we won't be able to do the job that we're assigned to do for our citizens.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.